Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we are jumping down into the world of Bitcoin, taking a look at what's been going on most recently and what we think is likely to happen next. As I get into today's video, if you do find it useful and informative, smash that like button. I do appreciate that. If you are new to the channel, why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so you will not miss another video update. So what are you waiting for? Check it out. And if you haven't yet joined us in Discord, check that out as well. Link is in the description below. It's a fantastic community talking crypto 24/7. It's completely free and I don't think you'll be disappointed by what you find down there. So why not go ahead and check it out. Let's jump right down into today's video and we'll kick things off with the 1 hour time frame. Okay guys, here we have Bitcoin paired up with USDT. We are using the 1 hour Binance chart here. Now, following on from yesterday's video, we were talking about a potential low at 37,070 to 37,272. We were talking about how that 200 EMA might act as support and prevent us from coming down here and how our minimum expectations were met. Well, it appears that, 200 EMA remained support, our minimum expectations were met, and we failed to come down any lower, which is positive for the price action of BTC. So let's go ahead and move our C wave up to here and just remove our targeted range. Okay, so now we can see that we found good support and we started to rally on up. Now we are, of course, tracking a C wave structure and we are looking for a significant move higher than where we currently are, right? We are targeting out, if I just go ahead and pull this down now onto our C wave low that we had over here on our 200 EMA, we can see that we're targeting out, and I'm just going to repurpose this once again, just up to this area right here. Okay, so basically 39,276 to 39,709. Now, the bigger yellow box area here, this is the one that's between $38,750 and $40,000. This is the actual kind of fifth wave target high, and what we're tracking is a three-wave structure that sits internally within our pattern here. Now, this essentially would be that we'd have a kind of articulated ending diagonal based pattern, right? So we have wave one, we then have a correction coming down, we then have a wave three, we then correct down, and then we move back up again. So although our target range here is between 39,276 and 39,709, it doesn't mean that this area is going to be the area that is the finishing structure, because I would expect us to kind of correct on down a little ways and then have an additional kind of push upwards into that kind of $40,000 level. Okay, we are tracking 5 waves, not just 3. Now, internally within here, I'm looking at the current structure as an A, B, C structure to get us up into this C wave high. Okay, and then of course we correct down and move up. So everything here on a kind of Elliott wave theory point of view is tracking very, very nicely. There isn't actually terribly too much for concern. Now, as we kind of think about this from our EMAs are actually looking okay as well. Let me zoom in here and remove some of the noise. You can see that the yellow line is the 50 SMA, the red line is the 50 EMA, and the white line is the 200 EMA. And at the moment, we've got both the 50 SMA and the 50 EMA above the 200 EMA, i.e. short-term price action is now higher than the longer-term price action. This gives us a lot of confidence in being more bullish right now than bearish. Now, from a smart money concepts point of view, we are still in a bullish structure, so all of that's looking pretty good. A couple of fair value gaps are seen here on the charts, but other than that, we aren't too concerned about what's going on with that 1 hour time frame. Everything's actually looking quite good. Now, we do find ourselves with a potential triple top. Now, a triple top is a bearish pattern where you basically tap the same range 3 times and get heavily rejected as a result, moving down quite aggressively into, some maybe very deep corrections, right? So we obviously have a lot of battling to go on here, basically between $38,414 and $38,450. This is going to be the main area where we are looking at the upper area of resistance. Now, the bulls are going to want to try to get a close above all of that and try to really rally us up into that $40,000 range. Whereas the bears are going to be heavily trying to suppress the price, preventing from pushing through that triple top situation. Okay, guys, let's take this up into the daily. Okay, so the daily time frame here really does still kind of ring true for our expanding diagonal. Now, we are, in my opinion, tracking the kind of fifth wave of the fifth wave of a fifth wave. Now, it's possible that we're still in the wave 3. That's kind of what I'm speculating a little bit on the hourly chart. We'll know whether or not that's true in the coming kind of days. So we'll either have completed or still looking to complete the wave 3. If we do go a little bit higher, then I'm going to be more inclined to say that we're still in the wave 3. Then we move down, then we finish off. Okay, so as you can kind of see here, it's basically a diagonal inside a diagonal fifth wave movement. And so it's kind of, it is what it is. Quite an interesting structure, and we are kind of basically just bouncing around in a kind of almost a ranging market here before we have, in my opinion, one last surge to the upside, where we then start to see some heavy corrections to the downside. Now, as you can kind of see here on our stochastic, I'll make this a little bit bigger. We've gone from the oversold area and we're tracking up towards the overbought area. Now, this is really important because we're already overbought on the monthly time frame, overbought on the weekly time frame. The only time frame that I'm tracking here that is not yet overbought is the daily. We're overbought on the 1 hour, the 4 hour, the 8 hour, the 12 hour, the 16 hour, and so forth, right? And so we want to be aware that we're running out of momentum upwards, and we haven't yet kind of finished the higher range expectations here. Now, it could just be one last blast, hit and tap that area, and then just absolutely get rejected. It's also possible with the minimum expectations basically being the previous high, and we kind of are tapping into new yearly highs just about. We might actually find ourselves with a triple top bearish end of structure and then complete collapse of the Bitcoin price. So we want to be a little bit aware that things are coming towards the end. We aren't talking about, rallying up much further than here. We are in fact really talking about, bigger corrective structures back down towards 30,000, lose that, 24,000, lose that, 20,000. And so there's lots of things going on that could potentially start to see this move to the downside. Okay, now, obviously, we have hope that we can finish off this structure around $40,000. And if we can, then that's going to be great because it gives us a nice clean exit, and we can start to really talk about, where we're heading next on the corrective pattern to the downside. And of course, there's some fundamental things happening in the space as well, right? We can see that there are some rumors flying around that a Fed pivot may happen sooner rather than later, i.e. early 2024. Now, if this is the case, and historically speaking, when the Fed do pivot, we tend to find the stock market correcting. And as such, I expect Bitcoin and the altcoins to correct down with the stock market. Usually, typically, we see a 50% correction in the stock market. I'm expecting a 40 to 50% correction for Bitcoin and a 50 to 60% correction on the altcoins. It could be very disastrous for many, many retail investors. Okay, so I think if that is to happen, we're going to see some pretty interesting corrections and some great opportunities in the space when it comes to cryptocurrencies and accumulation. Let's take a look at the weekly time frame. Now, from the weekly time frame, you can see that we're in that ascending wedge. Again, another bearish pattern on the weekly time frame. We're heavily overbought, and we are starting to push up into that upper bound, as you can kind of see here. Now, the trend lines are subjective, which basically means I can go ahead and adjust these to wherever I want, and they're still going to be perfectly fine. There's no real invalidation to them because we only have 2 touch points regardless, right? We either have it over here or we can have it over here. So ultimately, we can push up a little bit higher, completely subjective to where you draw them. Ultimately, you cannot rely on trend lines overly that well. Ultimately, though, we are in this ascending wedge, which is bearish, so we are looking for corrections to the downside. Now, that's only if you look at it from a kind of standard point of view, more kind of traditional. You use EMAs, you use your trend lines, and of course, from that kind of standpoint, you might be a little bit more bullish. However, if you actually take a look at this from a price action analysis standpoint, you have overlapping candlestick structures. These overlapping candlestick structures that you see here ultimately lead you into bearish patterns. Ultimately, higher highs and higher lows with overlapping patterns having more than, I think it's like a 80% chance, something to that effect, of actually breaking on down. Basically, there's a high probability of moves to the downside. And so with our overlapping structures, high highs, higher lows, we are looking for corrections out of this. And we are more likely, in my opinion, going to be going down lower than the lower trend line, i.e. we're going to come down more towards that kind of $20,000 level. Now, as you can see here from Smart Money Concepts, there are 2 fair value gaps. One down here coming in at 17,000 to the 20,000, and then on the higher side, you've got 22,000 upwards towards 26,000. We'll expect at least that top one to get filled out, in my opinion. And the second one is kind of fair play to see whether or not we do, and if whether or not we are able to basically grab hold of that area and put price back into where liquidity wasn't, i.e. put liquidity back where liquidity wasn't. So on the weekly chart, yeah, it's not looking as strong as you might see it on some of the other timeframes. In fact, most of these timeframes are running out of time. They are running out of momentum, and we are likely to start to see reversals for the Bitcoin price very, very soon, in my humble opinion. I'm going to leave this video right there, though, guys. If you have found it useful and informative, smash that like button. I do appreciate that. If you are new to the channel, why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. Until the next one, though, guys, have a fantastic day.